Hey guys, welcome to the video. In this video, I'm going to walk you through an investment opportunity that is so good that you might say it's a scam. You might be like, hey, Ankur, what's the catch? It sounds too good to be true. And the reason for that is because you're not used to seeing such deals by browsing through real estate app or, working with any buyer's agency network. And one of the most important reasons why this will be the case for sure is because we are making this opportunity rather than buying something off the shelf. We are solving a problem and we are getting rewarded for that. So it's a little bit different take, and you will learn in this video what I mean by this. So let's look at this Google map. This is Geelong. Geelong is roughly 90 minutes to Melbourne. It is the largest regional city in the country. So there's approximately 270,000 people live here. And this is the second largest city in Victoria. So this is Geelong CBD, and if you go 8 kilometers down south, there is this Deakin University. So this is a Deakin University campus. There are a few buildings, sporting facility, and right next to that, we have some employment going on, some industries already set up, and this is going to be like a semi-industrial plus educational plus hospital as well. So there is a hospital, Epworth Hospital. So this is like a nice hybrid educational and industrial sort of area. Also, there's a shopping mall, a lot of shopping activity here. There's a shopping center over here. So it's a nice little residential plus commercial hub. This suburb is called Ponds. I don't know if I'm pronouncing it right. This is the suburb name. Now, I'll take you to this university website. So as you can see, there are 8,000 students studying in Deakin University. So that's quite a big university. And if I show you the images of the Deakin University, as you can see, it's a nice big modern campus. So a lot of students will be studying here now and in the future. Also, I want to show this Epworth Hospital as well. So this hospital currently employs 1,500 to 2,000 employees. So you can see there's 8,000 students, there is industrial hub, there's shopping centers around, there's hospital around. So there is a lot of employment activity in that area alone. And also there's a lot of educational activity in that area. So that means there is a need for housing for these younger demographics. The students are not going to need a 4-bedroom houses or big family homes. Similarly, hospital staff will need affordable 1-bedroom, 2-bedroom solution, or maybe they will be sharing houses. So I know sharing houses is pretty common. So what I'll do next is I will jump onto flatmates.com.au. So this is a website where people share houses. So what I've done over here is I've put in the suburb Ponds and I put in a filter as ensuite. So obviously everyone wants their own bathroom. If they're sharing a house, no one wants to share bathroom these days. That's no for everyone that I speak to. So as you can see, in Ponds, there are only 3 rooms available. There's nothing much in this area at all, okay? And if I look at how many flatmates are looking for a room, you can see there's 72 people looking for an accommodation or looking for a room in Ponds. I have never seen this ridiculous amount of supply and demand imbalance. There's 3 rooms available, 75 people currently looking for a room in that suburb, which is just crazy. These are the people ready to move in. They're wanting to get into one of the shared accommodations. So the demand is crazy. And the very first time I saw this, I was shocked too. I'm like, how can that be such an imbalance? But then you look at it in the previous slides, I did show that university and there's hospital, there's employment house, there's shopping. And then also Geelong CBD is only like 5, 6, 7 kilometers away. So people from all over wants to live in this area as well because it's nice and new. So that is what's creating this sort of demand. So what I'm going to do next is I'm going to add in the neighboring suburbs like Armstrong Creek, Charlemont, Grovedale, Ponds, because people can live in 3 kilometers, 4 kilometers radius to their key employment and education location. So this should give us a broad idea of what the overall market is. So as you can see, nothing much has changed. Now we have only 4 results. On the other hand, if we use the same filters and see how many flatmates are looking for room, so there are 117 flatmates are looking for an accommodation in that area, which is crazy. So if I reiterate the analysis, we saw there were 4 rooms available with ensuite in that region, and there were 117 flatmates looking for a room. that is 18 flatmates competing for a room. So that is just crazy imbalance in that region. And also I want to stress on this point that many people don't even create their profile or make it visible on flatmates.com.au. So that means the faces that you saw on flatmates.com.au, those are like only people who are willing to show their face to public. It's a public website. Everyone can see you. But so many people have kept their profile hidden. So that means the market is much bigger than what we see in analysis. Now, also to give you a perspective on the broader market, so this is the ABS data. So this is registered marital status people aged 15 years and over. So you can see 48.8% of the people are married, whereas 51.2% of people are single. So just look at this again. 48% of the people are married. They want a family home. You know, they obviously will have their kids and eventually they'll need bigger family homes. Whereas 51.2% of the people, they don't even need family homes. They're single. They want to live in smaller accommodation, 1 or 2 bedroom, or maybe shared accommodation, right? That's the housing need. While 98% of properties are typical family homes in Geelong. So this is what the Geelong market looks like. Everything in Geelong is a typical family home. And this is the opportunity. This is the problem that we need to solve. I just love the photo there. And this photo kind of makes sense because if you solve this problem, you will be rewarded. So let's do one thing. Let's wear an entrepreneurship hat on. We need to maximize returns as a business owner. We need to minimize risk. We don't want to take any crazy risk to solve any burning problem because after all, it's leveraged money. We're going to take banks' money to invest in property, right? So we don't want to do that. And then we want to solve a burning problem so that we can be rewarded for that. So that's the entrepreneurship mindset. It's a problem-solving mindset as opposed to emotional mindset where you buy a property based on floor plan or how look and feel and things like that. But if you have the right mindset, you will go on a problem-solving mindset and your thinking and approach will be quite different. So what's the action plan? What's the solution? Well, step 1, we will buy land. Not too big, not too small, within 3 kilometers radius to university, and one that ticks all the boxes from compliance and feasibility perspective. Step 2, we build a normal looking house. So most loved facade, most loved color scheme, nothing out of the world. A house should look like a normal family home, just like this one. We don't want to do anything fancy or commercial where the resale prospects of a house changes or reduces. Step 3, we design a floor plan that makes a unicorn opportunity. So floor plan is where the $1 million idea is. And what I mean by that is you will design something like this. So it looks like a normal family home. You can see there's a double garage. There are a few bedrooms, a bathroom. There's a living area. There's a nice family area, meals, kitchen, your normal gas, normal laundry. Everything is like a normal family home. This is what normal families love. Now, if you look closely, even though it looks like a normal family home, this is smartly designed to capitalize and maximize the returns. I'll show you how. So this red box will be purposed as studio. So this will be the studio 1 that has its own bathroom. This is studio 2, so a bedroom and its own bathroom. And then we have studio 3, so a bedroom and its own bathroom. So that's tenant 1, tenant 2, tenant 3. So we'll have 2 different tenants here. So this is the studio 4. So that is tenant number 4. And then this is the studio number 5. So this is where we'll have the tenant number 5. Now, by making these small changes, what we have done is we have increased the value of the house. So that means it's no more going to fetch you $600 per week rental, but it can now fetch you $1,400 per week rental. So you have increased your yield from 3.5% to 10%. So that's what the magic of making an opportunity comes in. We got into the location where there's a massive need for such accommodation, and then we're building a product that will solve this problem, and then we will be rewarded for that. And that's how you make outperforming deals as opposed to buying something off the shelf on real estate and like, I like it, I'll buy it. No, this is total business. This is total entrepreneurship. And this is what I'm trying to do in this video. Also, we made some cool changes. Like we have separated out the pantries. So every tenant can have their own little space to store their daily groceries. Also, we have put in digital lock, fingerprint locks in every room so that every room is nice and secured and you have that sense of, privacy and security. So this is the solution. Then what we'll do as part of step 4 is we will hire a specialist property manager, the one who understands the niche, can help you furnish the property and manage it all for you. We work with a number of co-living property managers who can achieve great outcomes for your investment, and we need that person like an employer for us. It's like a business, like I said. We're building a business, and we'll hire this employer on a contractual basis, and the agreement's going to be a percentage cut of a rental property. Zero risk to you, zero risk to them. Now, the outcome, what we've achieved after doing this is, firstly, we have solved a great problem. So obviously, when you solve a problem, you get rewarded for that. That is economy 101. That is capitalism 101. So the outcome is $1,400 per week rental. That is $72,000 per year in rental income, whereas normal properties would go for $600 per week. Outcome 2, 10% yield in a market where 4% is said to be good. So definitely we have outperformed the market by 6% yield. So imagine that this getting compounded over time, over years and decades. The difference is going to be so big when you compare to normal investment. Turnkey packages are from $750K. We only do turnkey packages. So it starts from $750K as of Jan 2025. Obviously, if you're going to see this video 1 year from now, then the prices will be 900, whatever that may be. But as of today, prices are 750K. So that is only 30-40K expensive than the normal property. But the yield is almost more than double. So imagine that extra 30K investment, the ROI for that. It's just crazy. And what we've done is we have zero risk and flexible strategy. We can sell it to investor. We can sell it to families because the house looks like a normal family home. If you sell it to investors based on returns, they will pay premium. And then you can sell it to families. Let's say there's no investment activity in Geelong in 5 years, 10 years, 15 years, whenever you want to sell the property can be sold to owner-occupiers as well. And that makes it a perfect exit strategy and zero risk investment. Now, what we've done is we have created a risk-free positive cash flow business that not only improves your lifestyle, it doesn't compromise your lifestyle, it improves your lifestyle. What I mean by that is negatively geared properties will impact your lifestyle because with every new property, there's an expense line. And as things get more, expense line increases in your portfolio. That means you have to compromise on those holidays, all those big purchases, your car purchases or whatnot. You have to compromise on your lifestyle. Whereas with this, it improves your lifestyle because with every property, you're actually making more money. And also it helps accelerate financial independence because the ultimate goal for most people in property investing is to achieve that financial independence and have those passive income goals achieved. And that is what we accelerate as part of this strategy. And then it also improves your borrowing capacity because every deal improves your income and more income equals more borrowing capacity. So definitely that will help there. It helps scale your portfolio better. Accumulating more and more properties becomes much easier by doing such deals and making these successful. So every acquisition is like acquiring a business, making it super successful, and then acquiring the next business because it has made equity at the same time it's starting to make profit. And then it's more like, a snowball effect that you can get into by doing such strategy. So definitely a winning business or property investing I call it more like a business because you're making it as opposed to property investing where just buying someone else's product. So this is where this strategy stands out. Now, a lot of people say that, hey, that's all good, man. The cash flow is pretty good. What about the multi-generational wealth? I need multi-generational wealth for my family, for my future, and I need capital growth as well. So a lot of people think if there's so much cash flow, the capital growth has to be compromised. I would say no. The reason is we are building a normal family home in a market where there are good capital growth indicators. And the growth of this home will be in line with the market. All right? If the Geelong market goes up, so will your property. So that brings us to this next part of the presentation. How are capital growth indicators looking for Geelong? So I'll start with this Geelong growth cycle. So as you can see, this is a 10-15 years growth cycle for Geelong. And Geelong has been doing like 2-3 years cycle. There's a little bit of boom, there's a little bit of quiet period, little bit of boom, quiet, this is a solid boom, then the quiet time. There's a solid boom for 2 years, 3 years, quiet time. And right now we are somewhere in 2024, 2025. And this is kind of like the bottom of the market as I would look at it. If Geelong continues the same trend, then we may be right on the bottom of the market. So that means once the next boom cycle starts, we will be able to capitalize on the entire growth cycle. So that means, let's say you bought somewhere around 2019, 2020, then you would have gotten 10% growth first year, and then there's 20% growth, and then another just 30% growth. You got like an average 20% growth for 3 years. If you compound that, that becomes 60, 70% growth in like 3-4 years. I'm not sure if the same growth cycle will happen. The next growth cycle could be a little smaller, or could be even bigger. But the important thing to note is we are buying at the bottom of the market. So that means the land prices are pretty good. The build prices are pretty good. The property market is pretty good, not as competitive. And we are buying just like a Warren Buffett style. We found there's a good value in Geelong market. We got in, and now we're going to ride the wave. And also, you've got to keep this in mind. Co-living is a long-term strategy. You're holding this property for cash flow, and then you're going to be exiting at retirement maybe, or maybe never, right? So that means it's a long-term strategy. You don't need that quick buck and eventually equity for 1 or 2 years and then quiet time. You need that right value so you can leverage on the equity fully and then ride the wave from there. So this is where I see we are positioned well in the Geelong growth cycle right now as of 2025. Okay, now this is Geelong's affordability index. So affordability index is how long it takes for local residents to pay off their home loans. So that's sitting around 41 years. It does sound drastic, right? 41 years to pay off your home loans. But if you compare that to Sydney, in Sydney, it requires 80 years. So now all of a sudden, Geelong is starting to look way better. Also, we won't be buying in Geelong market overall, right? We will be buying in the Armstrong Creek area where the affordability is 29 years. So even if property doubles in value, people will still be able to buy houses, right? If you compare this to Sydney, 80 years, like Geelong is like affordability is pretty good. And in this market, in high interest market, everyone is chasing affordability. So this is looking pretty good. Vacancy rate have been rising, but then we have to care about co-living vacancy as opposed to normal home vacancy. But this matters too, and it is dropping more recently. So that is a good positive indicator as well. This is stock and market. So stock and market is trending downwards, which is very cool. So this says how many properties are available in the market for the buyers. So you can see in a month, there are 500, 600 properties available for buyers. Right now, more recently, it's actually 300, 400 properties. So the market is getting better. Inventory levels. So this is how many months of inventories are available in the market. So you can see it's were rising for a while, but off recently, this has been declining as well. So another positive indicator there. Building approvals is on the decline too. Obviously, I'm not very concerned about building approvals because there's no way we can catch up on the demand. Hold period is an interesting one. So how long people hold on to their property. So just 10, 15 years ago, they used to hold on to their property for 5 years average. But now recently, it's like close to 9 years. So that means the desirability of Geelong has been increasing over time and people are living there longer, holding on to their property longer. That indicates market stability, which is what we like. Now, this is a very important one. This is a population story for Geelong. So as of today, the population is around 270,000 people living in Geelong. Fast forward 2050, it is going to be roughly around 500,000 people. That's 500,000 people. Imagine population doubling in 25 years. Oh, that is a very good story because money is where people move. So this is a very good capital growth indicator for Geelong. Also, there's no point about all these fancy numbers when there are no jobs in the market, right? We need healthy economy. We need a healthy jobs market because if there's no jobs, no one's going to pay you rent. How can they afford it? In terms of unemployment rate, we can see Geelong is actually better than Victoria overall, and it is actually lower than Australia as well. So in terms of Geelong, the economy is pretty strong. The job market is pretty strong as well. Okay, lastly, industry diversity. So we want to make sure that Geelong is not relying on 1 or 2 industries because if that industry goes in wane, the entire market collapses. We want to make sure the industry is nice and diversified. So as you can see, the dominant industry is healthcare, which is evergreen industry. A boom period, bust period, doesn't matter. This industry will hold on to its jobs. So that's pretty good indicator. So 17% of the economy is on healthcare. We got construction, retail, education, accommodation, manufacturing. Everything is nice and distributed across different industries. So we know it's a nice and thriving and diversified economy. So nothing sinister is expected to happen in the coming years due to, global shakedown or recession. Now, that was all about statistical side of things. I want to talk about the qualitative side of things, the factor that you and I, common people, can understand and relate to better. So Geelong is the second largest city in Victoria. Look at those pictures. That's beautiful. Geelong is a beautiful city. So it is the second largest city in Victoria. It is the largest regional city in Australia. It's not a small town. We can definitely consider this as a proper city, just like Sydney, Melbourne, Perth, etc. 300,000 people living in there, so definitely a mega city. Also, it's home city of Avalon Airport, which is Melbourne's second largest airport, and a very busy one too. Like, it's not a common, quiet airport. Most of the airlines operate there. Also, Geelong is coastal, water, beaches, tourist spots, and has that happy vibe that Melbourne kind of lacks. Melbourne doesn't have those beaches and coastal vibe, whereas Geelong has it all. So that's pretty good. Also, everybody knows about Geelong now, especially after COVID. Every news article covers Geelong now. Every big companies are covering Geelong. If you look at Google history, Google search index or real estate search index, Geelong is kind of trending very well. So another good indicator for capital growth because it creates awareness. And then Geelong has the lifestyle factor that attracts. So beaches, wineries, CBD, jobs, everything kind of lines up to the lifestyle factor. And that is single most important thing for long-term desirability of every city. So we have that, and that's the reason why we see that constant population boom into the city. Now, my final conclusion is Geelong won't see that great short-term growth because of what's happening to the overall Victorian market. But Geelong will be one of the top performing cities in the 5 to 10 years window. So if you're looking for a quick buck, definitely consider Geelong. But if you want to build an amazing investment opportunity in a Geelong market that is currently at the bottom of the cycle, and you want that nice 5-10 years window for capital growth, then Geelong is the way to go. I hope you enjoy the video. If you want to see some deals that we're doing in Geelong right now, I'll put a link in the description. And also, if you like the video and you want to see more such videos, just subscribe to our channel so you're up to date with everything that we're posting. And we'll see you in the next video. Until then, happy investing. Thank you.